All right, everybody. I am so thrilled, and I've been waiting for a couple months to do this with Clay. Today, we've got Clayton Ferrer from Rigquipment Finance. We're going to be talking about financials, and every time I do this with Clay, I love doing it because Clay's really amazing at taking things that seem really complex and breaking it down into numbers that make sense. It's like a gift. And so when we're talking about like owner financing and debt and borrowing and all that kind of stuff, Clay can explain this stuff in a way that it's really simple to understand. And his company, Rigquipment Finance, works with a ton of gyms on getting their equipment and cash flow needs and stuff like that. So today he's going to talk to us about understanding your numbers. He's going to give us a bunch of really useful stuff, and I'm really looking forward to it. So welcome, Clay.
Chris, thank you so much for having me, bud. I really appreciate it. Thanks for the kind words up front there. And I got to reiterate, I'm super excited to be here with you and with the entire community today to share a little bit of insight on probably one of the most, I would say least areas of least focus, right, for the average gym owner, and one that I firmly believe that needs to change. So I'm excited to share some information with you guys today.
Yeah, honestly, man, I'm super pumped because we've talked about numbers before, operations, but you and I have never had a deep conversation on improving profits, and I'm really keen to see how knowing my numbers is going to reduce anxiety because I remember as a broke gym owner avoiding looking at my numbers. Like I wouldn't look at the bank account because there might be bad news in there. So this is going to be awesome. Take it
Yeah,
away.
well, I'm super excited. So hopefully, everybody can see my screen now. Right, highlighted the high level of this presentation. Right, it's yes, you are a numbers person. How to use data from your business to improve operations, increase profits, and reduce anxiety. And as Chris mentioned, I've spent the better part of a decade now working very closely with gym owners at Rigquipment Finance. We've worked with thousands of gym owners, right, to go into a very deep level dive with their numbers, right, and then just in conversations in general, right. One of the most common pieces of feedback as it relates to the financial side of your business is, well, hey, I'm just not a numbers person. My partner handles this. I've got a bookkeeper that does this stuff, right, but you are a numbers person. And the reality is this stuff is not that complex, right? And it doesn't take that much to understand it if you get a basic foundation, right? And so not only we have the Olympics coming up here, so this was an appropriate picture, right, of CJ Cummings, but in a group like this is like one of the only places in the world, right, as a finance guy, I can be like, hey, how much weight does CJ have on the bar there? And like almost immediately, someone's gonna be like, oh, 423.3 pounds, right? At least for our US folks. And it's not because they just like took the time to do a bunch of math, but they have a framework, right? It becomes really easy to understand numbers when you have, right, the context, the language, the symbols, and the rules associated with those numbers, right? And so, that same question, right? How much numbers on the bar, right? We have, these plates, right? Red plates in an Olympic weightlifting competition. They're going to, symbolize 25 kilos, right? The smaller white plate, the smaller red plate, the collars, right, have a standardized size, right? The small green plate, the weight of the bar itself, right? So all of a sudden you have this, right, very easy to calculate at second nature for a lot of gym owners. 192 kilograms, right? For our US gym owners, you know that converts into pounds, right, at a specific ratio. And so all of a sudden, sure, right, you might not consider yourself a numbers person, but wow, all of a sudden you are a numbers person. And it's not just, looking at weight on a barbell, obviously. Every piece of gym owner's business is numbers related, right? You're doing programming, you have sets, reps, right? You're looking at progress, what is how much are they improving, right? How much weight are they moving over course of what time, right? Are they making PRs? You can look at, different nutritional data, right? All these different metrics, right? For people to progress through their fitness journey, right? Which you shepherd them through as a business owner, right? It's all numbers based. So the thought that like you're not a numbers person, you are a numbers person. You're just thinking of these numbers in a different context, right? So numbers at the end of the day, right, in the context of business and in the context of anything really, they provide feedback regarding the effectiveness of a particular strategy. And so like taking this back to the like gym owner, right, trainer, nutritionist perspective, like you have a client, they have a desired outcome, right? That might be to lose weight or gain strength or whatever it might be. They want to go compete in something, right? So you're going to design a training or nutrition plan that's going to help them accomplish that goal, right? You as the expert, right, as the technician is going to understand, right, and capture a program that is going to take into account where they started, right, where they are right now, and where they want to go, what that goal is. You're going to implement the plan. They're going to start to adhere to it, right? You're going to be checking in with them, right? You're going to be data points that you're looking at over across the time, right? Key metrics. Where's their, their body fat percentage, right? Where's their skeletal muscle mass going, right? How is, what's their sort of caloric deficit are they operating at, right? How is that translating into the scale and translating into strength gains? All these different like data points and performance indicators that you then take in that information, not just to, pat yourself on the back, but you're going to use that information to turn around and like tweak and refine and change their program, right? And do more of the things that are working, do less of the things that aren't, to ensure that they're moving towards their goal. And at the end of the day, in the business context, right, tracking your financial data and other key performance metrics in your business, it works the exact same way, right? You want to use this information that's already there, right? It's a matter of just understanding it and accessing it so that you can take that information, right, and then improve your operations, right? Identify areas for improvement, right? Identify things that you need to change, and then ultimately make those changes and improve your results as a business owner. So, like, how does this work, right? In the context of business, and we'll probably do a parallel example here from a training perspective, right? In business, there's you, the business owner, right? It is your job to make strategic decisions about the business, right? You've got your CEO hat on. You're going to make determinations. Okay, what are the different membership options, right? How many, where do the price points change on commitment lengths, right? Contracts or not, right? How are you going to staff? How are you going to pay your staff, right? How much you spend in marketing, right? There are all these decisions, right? That once you make the decision, you implement, and that's going to result in something happening in your business, right? So if the decision was to offer month to month, 3 month, 6 month, and 1 year contracts, you're going to post those to your website, right? Or talk to them, in your client, your no sweat intros. That's going to result ultimately then in people either signing up or not, or changing contracts. And that's going to ultimately lead to outcomes for the business, right? In the form of dollars and cents, right? The revenues, right? And expenses, right? These revenues and expenses, they first show up in your bank account, right? That's cash in and cash out, right? At a very high level, very simple form. Right. And a lot of people, that's where, right, this sequence of events kind of ends, right? It might end at the bank account. Financial statements, you might not have them, understand them, or even do anything with the data that's in your bank account, which is, one, well, first off, you're not alone. There are a lot of people out there that are in that same position. So don't freak out or get too afraid, but recognize that, you should be doing more, and you can, right? But at the end of the day, what the financial statements are doing is categorizing, right, the cash that comes in and cash that goes out of your bank accounts into a standardized format, right? Something that is easy to compare, has a general set of rules, et cetera. So if we went through this same, flow chart here with you again, let's say it's a training plan to, lose weight and increase strength, right? You're going to make a strategic decision about what sort of training program you're going to put them in, what sort of nutrition plan you're going to put them in. Right, that's going to result in them taking actions, ideally, right, doing more things that promote, right, strength gains and weight loss. That's going to either result in strength gain and weight loss, or it's not. And you're going to take that feedback and then tweak the plan, right? Again, same thing's happening in business. So if you don't understand the consequences, right, of making a decision, it's going to be a lot harder to make the right decision. And again, training example, right, versus business example, it's going to be the same, right? You need to understand, you need to get feedback about what you did last month. Did that work for them or not? If it did, okay, where are spots we can make it work even better, or maybe we don't do anything, we're happy with that. If it didn't, let's figure out how we change that, right? Your business is the same way. And that's where really, if you're looking at this screen, I've left it incomplete to a certain extent for a specific reason, because this is not a linear flow. And that's going to be, right, one of the biggest takeaways of this, entire webinar, is that, right, at the end of the day, you have to then be able to take all that information that's summarized in the financial statements and right within your dashboard, right, within the two brain big sheet, all these other things, and then translate that back into the decision making, right, feedback loop. Right, so this really is more of a circuitous, right, a circular feedback loop than simply a straight line. And so the only thing worse than, right, not understanding the outcomes, right, of making a decision would be having the data to have made the right decision and just not realizing it's there. So like, the first time you raise your prices, right, there's a lot of fear that's associated with that. There's a lot of uncertainty. Am I going to lose a bunch of people? What's going to happen with my revenue? Well, the first time you go through that, you've just captured a bunch of data, right? You're looking at how much did you raise your pricing by? What percentage of your membership fell off as a result of that price increase, if any, right? You're going to look and turn the next month. Okay, so we have higher prices, our revenues come up. Oh, wait, but there's this other benefit because we did lose a few people, right? We're actually providing a better service, right? Our coach per client ratio now has gone up. And so there are these other things. It's more efficient for you to operate with less people, and based on the break even, you may still be generating more revenue. Right. The second time you go to raise your prices, it's still the first time you've raised your prices for the second time, but this time you now have all that data from the first time to decide, right, to help you make a better decision. So it's a simple example, right? But it's the sort of thing that happens all day, every day within your business. And it's really incumbent upon you as the owner to bridge that gap between making the decision, right, the financial outcomes, and then taking that feedback to say, okay, how do I make better decisions for my business? And at the end of the day, that's the key to long-term sustainable success in business. And so this is typically the point, right? We get to the bottom here, right? And we switch from numbers again that you feel comfortable with. All of a sudden we're talking financial statements, and wait a second, I'm not that kind of a numbers person, right? So this is where I'll start to lose people again, where they've, started to buy in. Okay, numbers, I got that. Oh, financial statements, not that kind of numbers person. Got somebody that handles that for me. Well, one, it's okay to have someone that handles it for you, but the person that's doing your bookkeeping, are they in charge of all the decisions that you make as a business owner? So it's inadequate for you at a minimum to totally rely on someone else's knowledge that isn't actually funneling into the way you make decisions within your business. So I truly believe it's incumbent upon you as an owner to be able to, even if someone else is doing it for you, to be able to understand what they're doing and how that information, again, can help you make better decisions as the business owner. So here's another example, right, showing things that context really changes. And so, right, first thing we're going to notice right away here is you're either going to recognize this image on the screen or you're not. Right, if you're a golfer, you're going to understand right away that this is a scorecard for golf, and it's not only a scorecard for golf, a scorecard for a very specific course, the ocean course of Kiowa Island. If you're an avid golfer, you probably are familiar with this. The PGA Championship was just played there this past year. Phil won it. It was phenomenal to watch. I was actually lucky enough to play this course back in October, right, as they were preparing for the PGA Championship. So it was a super cool experience for me as someone who's interested in golf and who, as you can see here, is not necessarily a good golfer, very, very average golfer. But right, and the reason I've included this here is not to show you or to brag that I played this course. It's because, again, if you understand, right, the symbols, the shortcuts, and the context associated with this scorecard, you're going to be able to get a lot more information out of it than what someone who doesn't have any understanding in golf is going to be able to. And it's also important to remember, my first time I ever walked on a golf course, I didn't understand the scorecard to the level of detail that I do now. Right, first thing here, I mean, scorecards in general, while the logo may change, the general format's going to be the same at pretty much any golf course you play to, right? And it's the same thing with financial statements. There's a standardized format in which things are presented, right? There's also a specific language around golf, right? You have birdies, pars, bogeys, right? Handicaps. There are all these terms that, again, if you don't golf, you probably are not aware of them. And then you're not aware of how that language then is reflected in the context of the scorecard. There's a ton of information that's captured here, right? Scores, right? Relative performance, how you're looking as you go through the match or as you go through the course, et cetera. And then there's a bunch of symbols. We have these dots here. Those indicate strokes with handicap. So not belaboring the point too much, but just helping you understand that, again, all of a sudden we have something that for someone who's unfamiliar with golf, unfamiliar with the sport, this is not going to mean anything to them. But the moment you start to learn a little bit and then learn more, all of a sudden you realize, okay, not only is the scorecard, not only is there a score completed here, but I can start to take this information and figure out areas to improve. Right. So for me, I might say, well, while it wasn't a good score in absolute terms, relative to my anticipated score here, right? And that's where the handicap comes into play in golf, right? My handicap, per how I normally play golf, I should be receiving about 21 strokes at this course, right? What you'll find in this scorecard is I actually played better than my historical average would have implied. So I was having a good day, right? But I can also then take that a step further and say, well, the areas that I struggled, let's see, where are the commonalities? Looks like it's long par fours. Par fours are over 400 yards, right? Maybe where there's a penalty involved. These are areas where I could easily pick up additional strokes, where I could become a better golfer. So again, a lot of information. None of it would make sense unless you had a basic understanding of golf, how score is kept, right? And the same thing happens in business, right? Because in business, right, financial statements are the scorecards of business. That's like the quick way to tell you how you are doing, right? And right or wrong, right? Your metric might be number of people impacted, and that's okay. That's fine, and that's wonderful, in fact. But at the end of the day, if you keep losing on the financial statement scorecard, maybe because you're not even keeping score, right? Your main goal of a mission of serving more people ultimately won't be able to be fulfilled because your business is going to cease to exist, right? So the financial statements, I mean, all they're doing is they're quantifying the relative performance of how you've operated your business, right? That data can then be analyzed to help you predict and improve, right, the future results. But again, you can't improve if you don't understand the rules of the game. So it's important that you start in that area, right? That should be your first focus, getting a basic level of understanding. So while you are not a numbers person, I am. I'm a numbers person, right? And I want you to improve your score. I know you want to improve your score. And I know that by better understanding the financial side of your business, you could be able to use that knowledge to make better decisions about how you operate your business. And this, right, implementing and continuously augmenting this like decision data, right, feedback loop is ultimately the key to your long-term sustainable success in business. And why would I say that? Why do I care? How do I know? Well, a lot of that falls within my background. I'm a lifelong business enthusiast, right? I didn't necessarily start with the lemonade stand route. I actually started with shaping surfboards in my garage. I had to learn, didn't realize like, hey, I mean, I ordered a VHS and I went to Home Depot with my parents, right? Because I was like, 13 or 14 years old at the time, right? To get all these supplies. That was, my first foray into business. Very quickly learned it takes more than something you're passionate about to run a successful business. So that was a quick lesson, right? But from there, I knew I wanted to learn more about business. I sought out the best at the time undergraduate business school in the country, pursued a degree in finance, right? I then took that into investment banking, where we did capital raise and M&A transactions. And for people that are unfamiliar with that, M&A, mergers and acquisitions. So our job as bankers was, one, to first go in and learn everything we could about the company. A lot of times all you're getting is financial statements, right? And so you're taking all of that information and telling a story, right? How, you're a story based on assumptions, obviously, but you're telling a story, right? Telling a story with this data. After about 5 years in that world and using that experience, ultimately I left to found Rigquipment Finance. We're a nationwide small business lender. We focus exclusively in the health and wellness industry. We've been lucky enough over the course of the last 8 years to invest $20 million directly into gym owners all across the U.S. Unfortunately, we are just U.S. based, but the general knowledge here, which is why we've started to add this component to our business, this educational component, really does apply around the world. So that's been my general background. It's what has led me to not only love business, but love the number side of business, right? I've used that not only in my prior life, used that as the foundation for starting Rigquipment Finance. And at the end of the day, right, we've invested real money in a lot of different businesses based on the same process, taking in the financials, right? Combining that with feedback from the owner and understanding and really estimating what the future of that business is going to look like and whether or not they are a good candidate to take on debt, right? At what terms, and to ensure that they'll be able to repay it. Because at the end of the day, for us, right, we're not a broker or a middleman. If we invest, right, if we lend money to a gym, right, our success is entirely dependent on their success and their ability to survive. And no point in history has that become really more relevant than the last, 18 months. We're still not out of it yet. Us, right, all of us on this call are not out of it yet. But at the end of the day, one thing we've learned for sure is that at no point in history has a focus on health and wellness ever been more important. So we are very, very optimistic about the future of this industry, and hopefully looking forward to speaking with and working with a lot more gym owners as things continue to open back up. So at this point, it's really probably where you're like, okay, I'm buying in. I get it. I know it's important. So what do I do? And so I'll lay out a couple steps here, and like, not surprised, not even step one, right? Step zero for anyone is going to be to learn, right? You need to understand the basics, right? You then take the basics and build upon that, right? Learning more and more details, more and more tools that ultimately can help you be a better business owner. And as I alluded to a moment ago, we've got a really awesome new tool that we're going to hopefully help a ton of gym owners, a ton of business owners in general, to learn about the financial side of the business. So we've launched functionalfinance.academy to help gym owners learn these core concepts, right? And to learn it, and it's the gift and curse of the internet, right? You are able to get information from a lot of different sources, but you don't always know whether you can trust that source. And particularly when it comes to like financial related advice and guidance, there's a big difference between like learning it from someone else or even learning by doing, because there are very, very important core like academic concepts that if you don't truly understand it and you're trying to then relay the information onto someone else, you might not even realize that or the person that's trying to relay this information may not even realize that they don't actually know what it is they're saying. And so they think that they're providing, helpful information. In reality, it may be causing more harm than it's good. So it's really important to be able to seek out people that you can have confidence that the information they're providing is legitimate. So now, obviously, the problem with this versus, a sales funnel or a sales script or a, Facebook ads, a lot of those things you implement, you take action, and you start to see results like right away. But this, this side of your business, this is the long game, right? This is like stuff that, and again, in my opinion, is the most valuable thing that you can do for your business or even yourself personally, is to get a better understanding of these concepts. But again, it's not an ROI, an immediate ROI positive investment, right? Of your time, your money, et cetera. And in this world of, immediate gratification, we wanted to give at least one person who attended this webinar some immediate ROI on this opportunity. So we're actually going to be giving $1,000 to one attendee of this webinar. Really easy. Here's what you're going to need to do. You'll visit www.functionalfinance.academy. Right? You're going to come to a page. There's going to be only the option to input your name and your email address. Once you hit submit, it's going to redirect you. It's going to send you right to the Functional Finance Academy YouTube page. Right now, it is totally blank, but you're going to click that red button in the upper right-hand corner. You're going to subscribe. And then the recording of this webinar is actually going to be posted. It'll become the first video on the YouTube channel. We've got a ton of other stuff, right? The full Functional Finance Academy website, a ton of curriculum around basic financial understanding, right? Understanding financial statements. How do you use these decisions to make, or how to use this information to make better decisions in your business? Drilling down into business valuations, drilling down into, right, return on investment, how to think about capital structure, partners, taking debt, et cetera. Tons of different stuff that is going to be very impactful and helpful for your business. That's going to be launching on both the website and the YouTube channel. So again, subscribe via the website. It's going to take you directly over to the YouTube page. Hit subscribe there as well. Again, this recording is going to be posted to that YouTube page. Because if you've subscribed, you're going to get a notification that's going to prompt you to go like it and then leave the comment numbers person. right? Based on anyone who's completed these 3 steps, we're going to leave the contest open for a week. So I guess 1 p.m. Eastern time next Monday, we will close the contest. We're going to randomly select one person that's completed these 3 steps, and we're going to give them the option, $1,000 cash or a complimentary historical financial analysis and building customized financial projections for your business. So you can take the immediate ROI on the cash, right? Or you can take what actually is much bigger ROI, take advantage of this other option, get some real feedback, get some guidance, right? Get a roadmap for the future via some financial projections for your business, right? Arguably worth a lot more than that $1,000 cash, not only in right current time value in today's dollars, but the things that you can use that information to do ultimately will be way more valuable. But we'll leave that up to you. Obviously, one caveat, to accept $1,000 cash prize, you must be able to accept payment in US dollars or whatever the equivalent will be as it converts it via Venmo or PayPal. So if you can't accept Venmo, you can't accept PayPal, you can't accept US dollars, unfortunately, you will get the complimentary, not unfortunately, but I think fortunately for you, you'll receive the historical financial analysis and customized financial projections. But unfortunately, you can't use that to pay your rent next month or go on a vacation or go out to dinner, whatever it may be. So step 1 for real now. So first thing you need to do, locate this information and then consolidate it, right? Consolidate where you're going to find all these different data sources. So where does the information, right, for a gym owner typically live, right? This financial information. Well, the reality is we have a bunch of different systems that we use to help us run our business, and the data and feedback lives in these various systems and locations. So where are places that you might be able to pull out data, right, from your membership management software platform? So whether it's a Quantify, ZenPlan, PushPress, right, whatever the case may be, you should be able to take, right, and export data from there that becomes one of the, I'd say legs of your financial analysis stool, right? Another spot, your bank statements, right? That's where cash moves in and out, at least once non-cash transactions move in and out, money moves in and out of your bank accounts. So that's going to be another important place to look, right? Oftentimes, as we talked about earlier, and most business owners, especially as business owners get more experienced, they'll have, right, financial statements. Bookkeeper, someone's preparing financials based on what's happening in the bank statements, right? That's going to be another spot for this data, obviously, as we're looking at financial data. We want to look at our financial statements. Right, other places, tax returns, you might have information if you want to go into in-depth on analytics around your marketing spend, right? You might have to look at your Facebook ads account. You might have to look at, the other metrics from things that are happening in your business that don't on the surface seem like they are directly financially related. But those are the I would say the first few spots to look. Membership management software, your bank statements, your financial statements. That's going to be the core spot, and then looking to find others. There's more granular data, that's not present there that you have tracked elsewhere. Right, you want to make sure you have that all in a single location, because step 2 is really just observe. And so my one recommendation for anyone in the that's interested in learning more about the financial side of your business, just start to observe it. Even if you don't understand it yet, you skip step 0, right? Maybe even skip step 1. That's okay, in the sense that I would encourage you to log into your bank account, right? Your business bank account online, and all of your, any sort of credit cards, anywhere where money moves in and out of your business, and just look at the prior day's transactions, right? Close that gap between making a decision about your business and the financial result, right? Or the financial consequence of that decision, right? You're going to start to notice things. You're going to start to notice patterns. And I can speak from experience here. Like, I've looked at this one, probably hundreds of thousands of bank statements, right? Not only because I was trying to create observations about the gym owner's business, but I was also trying to build a framework for a machine, right? For a computer to make the same sort of observations that I'm making, right? So I look at these statements and have looked at these statements with a very specific goal, right? And I would encourage you to just start looking, right? Observe what's happening, try to shorten that feedback. And ultimately, right, as you start to move on to step 3, you're shortening the gap. You figured out where everything is. Now you want to compile and analyze it. This could be something like the 2 Brain Big Sheet and the 2 Brain Dashboard. At the end of the day, right, you're going to have certain things that are specific to your business. So I think that having some sort of customization and a system, right, and a framework for analyzing your performance is super important. And so when we think about analyzing, there's probably two, I would say, two words right above kind of all else to help give you a little direction in that front. And one is trends, and two is relationships, right? And so trends are movements in data across time periods. So, right, so from January to February to March to April to May to June, July. But as you move through the year, you'll notice trends in certain categories, right? Certain revenue items or expense items. Some things trend up, some things trend down. Ideally, right, you're hoping top line's trending up, expenses are staying flat or trending down. That's an important thing to understand, right? How are things trending over time? How do your numbers compare this month to last month, to the same month a year ago, to the same month 2 years ago, right? To the average over the last 3 months or average over the last 6 months. So it's going to not only tell you how you're trending, but how you're performing relative to prior periods. And again, you always want to be doing better. If you're not, you want to understand why not, and then take the steps to implement and reverse, right? So you do start doing better again, right? Relationships, right? That second key point, that's going to be things like average revenue per member, right? So while trends move across time, right, throughout the year and throughout the years, relationships happen within a single statement. So, right, number of members and revenue, right, the relationship between those two gives you your average revenue per member, right, your cost per lead, right, all sorts of different data. There's a relationship between like data point, data source, or line item in the financials that then becomes, right, actionable information for you going forward. Then obviously there are trends in relationships, right? So not only do you want to have a positive trend in revenue, you probably also want to see a positive trend in your average revenue per member. Reality is, though, can't stop there, because you might very quickly realize that what seems like is a good trend, once you start to dig in, and this is why it's important to understand what's happening behind the scenes, because a trend, right, a relationship on the surface may look positive, but once you dig in, you're going to understand, well, either and maybe there was a mistake that was made in the inputting the financial data, and this number didn't go up, it actually went down. And I'm not able to even identify that there was an error made, which is now giving me feedback to make the wrong decision, right? When I think I'm making a decision based on data that's actually incorrect. So super important to not only be able to look and track and analyze, but to also understand what's happening behind the scenes so that you're not analyzing it, inadequately or incomplete. Step 4, right, project and implement, right? So when we think about projections for a business, right, estimates, right, making the decision whether we're going to do something or not, we want to forecast what the result of that's going to be, right? Because on one hand, if we aren't expecting a certain outcome when we make a decision or implement a process, we don't know if we achieve the outcome or not, right? Like, you need to have an objective in doing something, and then you'll be able to compare, did we hit this objective? Did we outperform? Did we underperform? Why? And then what do we do better next time? Right. So you need to be able to project it. And again, right, the easiest way to project into the future is by looking in the past. Right. This was something we mentioned earlier, right, with the price raise conversation, right? The more historical data you have, the more accurately you can project what's going to happen in the future. At the end of the day, like, the one thing we know about financial projections, like, with certainty, they will be wrong. Right. No one, no matter how qualified or how good you are, nothing is going to be projected perfectly, right? Down to detailed levels. So, right, the goal is not to project the future in, right, perfection, but to minimize the degree of wrongness, right, that's implicit in the assumptions that you're making about the future. So again, look backwards to develop your assumptions about future performance. As that future performance materializes, compare. Did we achieve the outcome? Did we not? Where did we fall short? What can we do better? And then implement better decisions for your business to achieve the goal next time. And it doesn't end there, right? Because at the end of the day, the last one, step 5, repeat. This is not a one-time activity. It should be a daily part of daily, right? Monthly, weekly, quarterly, annually, right? It should be a foundational component of how you operate your business. So, right, step 2, observe. Like, observe daily. I mean, it is the first thing that I do when I turn on my computer. I look across our bank accounts. I look across our financial data. I look across our, right, key performance metrics, our dashboards, it gives me a very quick litmus test into the health of the business on that day, right? Which again, it's a very small increment in time, but I'm looking at it every single day, and I'm implicitly, I'm loading the back of my mind with all these decisions that were made in the past, and I'm seeing the impact on a daily basis, and that's helping craft how I'm going to operate the business going forward. Right? Step 3, right? This is the compile and analyze. You want to have a regular cadence of being able to look at your data. I think, monthly is a good place to start, right? From there, you're going to look at it again quarterly, and then you look at it again annually, right? These things compound, right? It's like a big snowball effect. You do not, though, want to be waiting a full year to just, I look at my tax return every single year. Like, that data is so old and so stale by that time. And even if it's not necessarily old and stale, you've just missed a whole year potentially, or half a year of opportunities to implement improvements if you're waiting, right? So the longer you wait to review, right, to perform these analytics, the less time you have to actually improve upon them. So it's really important to get in a cadence of compiling, analyzing your data. And then finally, right, same cadence, monthly, quarterly, annually, typically, you're going to project and implement. Like every single month, you're reviewing your financials, right? You're reviewing them in the context of what you just did, what you did previously, what you've done in years past, and then figuring out how you can improve that going forward, right? And that could be as easy as, well, Q2 ends, right? We're getting to the middle of summer, and we know historically July and August are going to be typically down months for revenue for us. People go on vacation, they pause, they freeze. How can we implement, right, alternative sources of revenue that allow us to mitigate that? Or said differently, you might say, well, all of a sudden July is way down relative to June. What's happened wrong? Well, it's summer, people are leaving. But how does July of this year look relative to July of last year? Right, probably a lot better. So even though it's down relative to the month prior, you want to look again at the year prior and start to see longer term trends, recognize that the world has not all of a sudden fallen apart because people went on vacation. Your relative performance compared to last July is actually improving. So you are doing things better, right? We want to, again, continuously be doing things better, continuously taking the information that's already there, already available in our business, and using that to make better decisions. So that is the high level context that we have today for our presentation. So again, I will flip back, remind everyone we're giving away $1,000 or a very, very comprehensive historical financial analysis and customized financial projections for your business. Only have to do 3 things. Head over to www.functionalfinance.academy. Subscribe with your name and email address. We're going to be launching the site in full next month. So go ahead and get on the list now. We'll be able to provide you updates. And in the meantime, we're going to start sending you important, actionable information on a weekly basis via our newsletter. Again, once you subscribe there, it's going to redirect you over to the Functional Finance Academy YouTube page. Also launching very soon. It's going to be a ton of video content, live tutorials, recorded tutorials, things that are looking at within Excel, right? Within Quantify, like here's where the data is, here's what you can do with it. So we're putting a lot of information there. Once this recording gets posted, you're going to get a notification. You're going to like it. You're going to comment with numbers person. And by this time next week, we'll be reaching out to one lucky person to let them know they are the winner.
That's sweet, Clay. Thank you. $1,000 or a roadmap for the future. I mean, a lot of us pay like between $6,000 and $20,000 a year to get that. So that's a super amazing gift.
Yeah, no, thank you, Chris. I mean, again, it's one of those. 1,000 may be important to someone at the time. I would say take the latter piece. You're going to get a lot more value out of that than you will out of simply the cash, unless you turn around and invest that cash into something that's going to provide you with the same sort of insight. But you're likely not going to be able to with only $1,000.
That's right. Yeah. So Clay, like when people seek out your services, what are maybe the 2 or 3 things that they're trying to accomplish in their business?
Yeah, I mean, so the first is growth, right? So we work with both startups, so first time entrepreneur, first time gym owners, as well as people that have been in business for a number of years. Maybe they're looking to expand their existing facility. Maybe they're looking for a second, third, or fourth location. Maybe they're looking to buy another business. So we really work with people across the gamut. But at the end of the day, they want to invest in their business in some form or fashion. It may be through equipment, it may be through improving the facility, right? It may be um, to locate, relocate to a new facility, right? But they want to invest, capital into their business with the goal of having their business improve, right, or grow. And so that's going to be, first and foremost, the people that we tend to work with, people that are looking to grow their business and to grow it on not only an efficient manner, right, but a capital efficient manner. And so, certainly you can pay cash for anything that you could finance, right? But what is the true cost of paying cash versus financing something, right? What is that cash worth in terms of safety net cushion, right? What is that cash value? What is it worth to you in terms of other things that you could be doing in your personal life? What is it worth to you in the sense of an opportunity that could come along a month or two from now, where if you had spent that cash, you now no longer have it to be able to pursue some sort of opportunity down the road. So there's a lot of costs that are involved with using cash. There's costs involved with financing or with taking on a partner. And so again, understanding what the pros and cons are, where the benefits and drawbacks are of all these different, sources of capital and uses of capital is going to be hugely important for becoming a better business owner.
Yeah, and I guess people really seek you out during a period of transition. They're either getting bigger or maybe they're just starting out or they need some help. And I think it's really important to have somebody in your corner that you can trust when that's happening. Clay, who do you prefer to work with?
Yeah. So first and foremost, it's people that are passionate about making a difference in their community. I mean, again, so I found CrossFit specifically, back in 2010, 2011 timeframe, and I fell in love with it first as a practitioner, then as a coach, then as understanding the business side of it. And
Yeah.
so when I started this company, I was passionate about helping the people whose job is helping other people. And at the end of the day, I think that truly is the only way we fix our global healthcare system, right? Is by empowering the people that are on the front lines of the fight against obesity and sickness. So anyone that is super passionate about that mission, right, and is pursuing it through a gym or fitness or wellness facility is our core customer. Obviously, someone that's been in business for longer becomes an even better customer because we'll run through that same analysis, right, that we talked about. We'll look at the historical data. The more historical data that's available, right, us as a lender, that reduces uncertainty, right? And when you reduce uncertainty, you reduce anxiety for you as a business owner. For us as a lender, reducing uncertainty reduces risk, right? Which makes it more likely that you're going to be improved. So we do work with startups. We do work with historic, with existing operators. All things equal, right? Easier to get financing for an existing business than it is for a new one, right? All things equal, easier to get financing for an existing business that has well-tracked, well-organized, clear historical financial data that allows us to paint a picture for where that business is going in the future.
One of the questions we always get when we do this is, I thought I was bad to take on debt. I was told you always bootstrap everything. And in my own personal experience, like I almost choked my business to death because I wouldn't take on a loan. And then when I finally did back in 2006, that changed things. It saved me and it turned everything around. Do you still get this question a lot, Clay? And like, what's your response?
We do. We get it all the time, and we see these comments all the time, right? That debt is bad. And like, if you're going to take one thing away from this, like debt is not bad, right? The misuse and misunderstanding of debt is bad, right? So people, right, like financial literacy is a global problem, right? The same way, right? The obesity and COVID are a global problem. It's like financial literacy is a global problem. It's not taught in our schools, right? And so what happens is people get into the real world, they don't understand it, and they end up making really bad decisions. And those decisions cause, right, financial harm, right, or psychological harm. And their only experience with debt, or with someone else's experience, who then go, right, shouts from the mountaintop that all debt is bad because I had a bad experience with it. Like it's very common out there. And the reality is it's so wrong, right? Yeah, sure, right. In certain circumstances, right, debt is not going to be appropriate. In a lot of circumstances, debt is not going to be appropriate, or the type of debt is not going to be appropriate. But if you understand, right, the basic financial concepts, you understand debt, if you understand the obligation, you understand the repayment terms, you understand that this is allowing you to accelerate the growth of your business, right, without investing your own capital, which is the most expensive form of capital there is. Like equity is the most expensive type of capital that's out there. Debt may have an explicit cost to it, right? You may pay interest on debt, but with equity, you have the perpetual stream of earnings from your business, right? In the future, to the extent that you're taking on a partner, you have, right, a theoretically higher cost of capital because you could be using that equity, right? Your own savings to buy a house, right? To buy a building, to buy a gym that's struggling, right? There are all these other opportunities that you could be taking advantage of with which if you dump all of your cash into a big equipment purchase, right, or a big renovation, all of a sudden now, yeah, you are going to probably be way more stressed because your safety net is gone. Right. Next month, when a great opportunity comes along, you can no longer take advantage of it because you've just spent your money. So, I think it's on one hand, it's maintaining optionality is a really good reason why you would use someone else's money, right? Where you'd finance a purchase. So optionality is a really important piece. But two, I lost train of thought here. I'll circle back to that, but to come back on good debt versus bad debt, I do like to at least point out, like, so the one type of debt that I've seen a bunch of over the last 8 years that I would like to encourage everyone to stay away from is like your merchant cash advance. And so someone like through your payment processor that's going to give you an advance of funds, and they're going to take a percentage of your revenue directly daily out of your account before you ever see it. So that can be good in certain circumstances. It's like with everything, right? It depends. But right, more often than not, we see people rely on that sort of debt because they haven't generated sufficient revenue. And so they're using that to cover the cost of their operations and not the cost of the assets, right? Not making investments into the business. They're just trying to keep the lights on and the doors open. And so what happens next month is, well, you probably still have the same revenue. Now you have less of it though coming in the door since the merchant cash advance is taking money out. And not only do you have the same expenses, right? You probably have more expenses because you have the debt service now as well. So that can create a really dangerous, spiral for a lot of businesses. So merchant cash advance, if I was going to classify like one type of debt as largely typically being bad, that's what it would be. Everything else, you need to have a full understanding and awareness of it before you can make a decision whether it's right or not for your business. And we're more than happy to help you with that, whether we're providing the capital or not. And that's one of the first things when we get, applicants that have a lot of years in business, that have strong banking relationships. It's, look, you should explore other options in addition to us because there may be better alternatives for your business. You might decide that there's a bunch of reasons why you would still choose us over a bank, for example, cost, specifically pledged personal collateral, flexibility, rigidity, inability for them to understand your business model. So there's a lot of reasons why we might still be a better source. But at the end of the day, I tell everyone, explore all your options, have your options there so you can make a better and more informed decision, to go forward.
All right, man. So last question. Some
Yeah.
people would look at like their own savings as a financing option for their business, right? Why is that a bad idea?
So I would say it can be a bad idea, but again, right. So your goal with the business is, right, to ultimately create a vehicle for you to help people, right, but also for wealth creation. I mean, more often than not, like the vast majority of owners we've worked with, like their business becomes like their single most valuable, as well as valuable asset, but also the one that's generating their current income. So if you think about using your business as a vehicle to create wealth, well, the wealth that you extract, if you're then reinvesting it back in the business, that may be okay, but you may realize that there's a lot of other opportunities to take that excess cash and invest it elsewhere, right? And that's one of the things I've loved seeing with Two Brain over the years is this really leveling up of the conversation as people get more successful. They're understanding that there are a lot of other ways where they can help diversify their revenue. They can add additional streams of income. They can diversify, right, and then help mitigate the risk of one of these streams, going away. So I would say improve your core, right, asset that's the business, because if you can, right, take your monthly distributable cash flow as the owner and double that, all of a sudden you can accumulate twice as much that you can then potentially reinvest in your business. But really, you're creating a war chest to be able to go take advantage of other options. So when you think about using your savings, you are making a conscious decision. Not only is this the right time and the right decision to use my savings on this purchase right now, it's also the right time now in the foreseeable future, the point where I can replenish that. And even at that point, well, the opportunity might be twice as expensive down the road. And so now, even though you got back to where you are now, after having spent this money, you all of a sudden don't have the ability to take advantage of something that was going to be a twice as big of opportunity, which means a lot more, wealth and value for you down the road. So always be cognizant that when you spend your savings, you're not only spending today's money, you're spending all the future earnings that savings could generate for you, and you're also spending all the ability to take advantage of all these future opportunities, which you aren't aware of at the moment.
Yeah, thanks, Clay. I think that your own money is also the most expensive money there is because you've already paid taxes on it. And so the government's taken 20, 32%, and you're paying with after tax income basically if you're investing your own money. So I would rather see people invest Clay's money than their own money, keep their own money in their bank account, buy their family bread and groceries, and yeah, pay Clay back over time and finance your business the right way. So Clay, man, always an insightful conversation. Thanks. There's a lot of brand new stuff in here that I've never heard from you before. So I'm really pumped to look at the Academy too. And if you're just joining us right now, Clay's offering $1,000 prize to people who follow a couple of steps. You'll see them here. He's going to put them back up on the screen. But this Finance Academy is an amazing way to level up. So especially if your gym is seeing a bit of a surge right now and you're thinking like, what's the next step? Probably 50% of the people coming into Two Brain right now are saying that, hey, I am getting more successful. What's the next step for me? The next step for you is to understand your finances, to have kind of a financial roadmap and understand what your options really are for the future. Do you open a second location? Do you buy your building? Do you do something different? Hey, it all comes down to the numbers, and Clay's the guy to ask about them. So, Clay, thanks a lot, man, for giving us a full hour here today. I really appreciate it. I'm sure people are going to have their own private, personal questions for you. Where can they reach you?
Awesome. So, first step, my email address, I'll drop it in the comments afterwards, but I'm a super accessible person. So, via email, you can find me on Facebook. You can find me on Instagram. I'm admittedly not as active as I would like to on those platforms, but I will be more. So find me there. And again, email address, last name Ferrer.Clayton at Rigquipment, RIGQIPMENT.com. So would love to interact more with people, whether it's in the group, whether it's outside of the group, if it's in a one-on-one, basis, please reach out. We are here to help and we want to help.
Thanks, Clay. Thanks, everybody. We'll see you next time.
Awesome. Thanks, Coop. Appreciate it. Thank you, everybody.